Welcome to Straddle Income. Today is Thursday, July 23rd, and today the market really took a dive. But should you worry? So in today's video, we're going to talk about three things. The market overall situation, then number two, some of the trades that I made today in association with the trades that I did yesterday. I closed a couple, made a couple more, and then lastly, we can look at some of the highlights that you should be worried about, or at least pay attention tomorrow when the market opens. So with that out of the way, let's look at the market. Both SPY, S&P 500, and the Nasdaq took a dive today. But if you look at it from the biggest scale, this is actually pretty healthy. The market really has wrapped up significantly in the last couple of weeks, and sometimes it's very healthy to take a little bit break and then pull back to where it's supposed to be. What you're looking at right now is SPY graph. So as you can see, the daily graph here actually closed a little bit above the 10-day moving average. This is very healthy actually. So if you look at close, it just, even though the dive was really big today, but it's still closed above the 10-day moving average. So I wouldn't worry too much about the market. However, you should still pay attention tomorrow. Once this market start open and really crash this 10-day moving average really, in the first hour or two, and then take a free dive, then that's where panicking can start to happen. But still, at this point, I wouldn't worry too much. I think the 10-day moving average is about 321, 320. So this is for S&P 500. Let's look at the Nasdaq. Similarly, for Nasdaq, if you want to zoom out a little bit, Nasdaq there also, well, it appears through the 10-day moving average, but the fundamental line for Nasdaq is it's already very extended. So the very first level that you should be paying attention to is 10,244. And the second level you should pay attention to is around 9,600. So really at this point, even though it crossed the 10-day moving average, but it's still well above the first threshold that you should be worried about. So with that being said, the market, even though it has some kind of pulled back, but it's still very healthy. That's the highlight I wanted you guys to take away from. But let's look at why the market was, behaved the way it did. There are a couple factors. The top three are, we had a jobless number reported earlier today. It was worse than expected. So that's the catalyst in the morning. And number two, there's a probe on Apple, Google, the big companies about investigations, antitrust laws. And the last but not least, there's the U.S.-China tensions. The U.S. closed the Chinese consulate in Houston, and China started to retaliate. So those are the three things that really started to worry about, have the investors start to worry about the market. And the fact that Tesla reported earnings yesterday, and the Netflix reported earnings last week, some of the big momentum is shifting right now. Then with that being said, let's look at the trade that I did today. Right off the bat, I made a couple of trades this morning. First off, in the morning, I closed my Tesla trade. So as you guys saw from the video yesterday, I made a pull-put spread for Tesla before the earnings. Tesla reported the earnings, and it was really good, and it cleared the hurdle of being accepted in the S&P 500. So this morning, I wake up and really early trying to manage that particular trade. So in the morning, I started to close the trade for 900 and 850, the put spread. I paid about $100. So overall, if we look at my Tesla trade, I tried to cut my losses, and my overall losses is about $260. So you can see that the $100 that I paid back, and then the order that I made a couple of days yesterday, which was Tesla, it's 360. So really, I'm paying about 350 and trying to close the trade with $100. So I made I cut a loss out there. But hindsight 2020, here's the lesson learned for you guys. When you have a put spread, your risk is defined. So if that's the case, maybe it's a good idea to wait it out. And today is a typical situation. Even though Tesla reported earnings, but the overall market was really in a bad shape and then dragged the Tesla price. So Tesla started to really take a, actually have a significant drop this morning and had a stay and hold this particular spread. I probably would have come back and made money out of it. So for some of you guys, the lesson learned is don't react too fast, but it's always hindsight, 2020. The second trade I did this morning was related to Innovate. The Innovate started to rip out, so I bought a couple calls way out of the money. The Innovate is for some of you have never heard about it. Innovate is a biotech company. They started to rip up in the morning and with 8% gain, even though the entire market was dropping. So I bought out of the money call. I paid about $61, and right now the last trade is about $55. So I'll hold it for a couple of days, and then we'll see how it goes. The third trade I made this morning is about I closed my Walmart. The Walmart. I bought a Walmart way a couple weeks back. Actually, I take it back. I think it was only last week or 2 weeks ago. No, actually, it was around July 7th when Walmart started to have this news about providing, a Prime-like subscription business for free delivery. The Walmart trade really ripped up. So I bought about 10 different calls at the price of 22 cents each. And then I started to cash out along the way. Now I have 2 calls left. Each call is still 22 cents, and the market price is about $80. So I think I will just probably hold it until August or September. But the lesson really, the key takeaway here is Walmart, and along with many other companies, they had a huge earnings ramp up in the last couple of weeks. And the fact that earnings season is really starting, and IV started to crush, companies start to report earnings, things are really slowing down. And as a result, the rate of this call price increase has significantly slowed down. So next time before the earnings, try to take cash out as much as possible, rather than just stay and wait till the earning and hopefully it will rip through again. But anyway, I've already took all my initial investment back and made a couple $100 here and there by selling the Walmart call. So I will just leave the 2 calls that's left there and try to see how it goes. The last trade I did today is Snap. As some of you guys have heard, Snap is really on my long-term portfolio. I'm a true believer of Snap being the next Facebook, and even the fact that Congress is banning Chinese TikTok and other software companies. I think Snap will end up being the beneficiary from those kind of sanctions. But Snap reported earnings a couple of days ago and then started to drop. Snap's stocks, I think today, with the fact that market is also closing, that dropped below the around $21.97. I think you're right. I was right. It's $21.97. So if I had a couple play on the Snap, so I have shares, and I also have Snaps. I sold the Snap call on the. So I have the Snap calls around for July 24. That has been collapsed, very significantly. I hold it out, try to see how the earnings plays, and I already collected my premium in my initial investment, but this is a free trade for me. Well, it is what it is. I can now ask for too much. But the things I'm going to be looking at tomorrow is the Snap, put that I have here. I sold the Snap put at $22. Basically, for some of you guys don't understand, when you're selling a put, you're obligated to get the shares at the $22 minus whatever money you're paying. So if by the end of the next week and the Snap ended up being below $22, the person who are buying my put contract, they will exercise the contract, and I will be assigned for 100 shares of Snap at the price of $22 minus I think $1. So it will be around $21. So I will get a Snap shares about $21. I'm fine with that. I'm a long-term believer, and I want to accumulate more Snap shares. So that's what I did. I did that, and then further on, I also did another one at $22. I collected premium about $174, with betting the fact that by the end of September 18, it will stay above 174. So we have a couple of months out from now. Selling a put spread is one of the interesting things. If you don't mind holding the shares, this is a good way for you to get shares of the company you're interested at a discounted price. Basically, instead of paying $22, you're paying basically $22 minus $1.73. So we're talking about $20, $20 and then 27 cents for each share. So with that being said, these are the trades that I made today. And then the things that I will be looking at tomorrow, there are a couple of things. One, Twitter. Twitter has reported earnings as actually one of the highlights here in today's free fall market. Twitter reported earnings, and it had a rip through of 4% in the morning. I think in the morning it was like 8%, but it kind of just slowed it down because of overall market conditions. So I have the Twitter call in August. I'll see how it goes. I have it at $50, but really the fact that market slowed it down took a lot of momentum out of the calls that I had earlier. So these are all the free calls that I have left. I've made a couple more in the beginning, but I already cashed out to get my initial investment back. Now I'm just trying to see if I can get something more than $21 in the next couple of weeks. So I still have a lot of time, and I think that Twitter the fact that it's still one of the key stocks that's not dropping as much as the other ones, it's a good sign. And then when the market comes back with full force, I expect Twitter to be one of the leading factors. But for some of you who don't have Twitter shares, this might be a good time to get into the Twitter calls. Intel had a really bad report earnings today. I think it really took a dive towards after the earnings. So let's look at the Intel chart. So as you can see, Intel, after the earnings it was reported, Intel took a huge drop. The fact that they beat the forecast, but really the fundamental factor that caused this huge drop is that they cannot go to the 7-nanometer technologies like all other competitors, and they're going to delay it for 6 more months. So in the semiconductor spaces, 7-nanometer and it's next frontiers for a lot of the companies. And Intel, even though TSMC, Texas Instruments was able to come out in the winners in the Q2 report, Intel actually didn't, because they couldn't make the 7-nanometer technologies. So we'll see how the Intel plays tomorrow. I think for the long term, Intel is really taking a hit here, and it's going to be taking a while for it to come back and really become another favorite for Wall Street. But on the other side, AMD is enjoying the fact that Intel is taking a hit. So AMD, for some of you guys interested in the long-term AMD positions, tomorrow might be a good one to pay attention to it. You might see it getting, you probably want to look at the cost, and then you can also see on the premiums. There are different ways of playing that. So AMD is on my radar tomorrow. I have AMD shares, and I'm going to pay attention to AMD option contracts tomorrow. There are other things that I want to highlight to you guys is Murner and the ABUS. So Murner, for example, was one of the leading candidates for these assets. But today, there's a news that Murner has actually lost the lawsuit against the other company called ABUS. So with that being said, as one of the key ingredients, they don't have the right to own that for the vaccine production. So the Murner stocks really took a dive here from $80 to $75. On the contrary, ABUS has really enjoyed significant runs. So ABUS is about $2.87. Then the market closed and it kept going up right at $7.46. So I don't know if the train has already departed, but this is something you want to pay attention tomorrow. The news has really come out towards the middle of the day, and the share has ripped through 119%. So if you were able to catch this wave early at $3.70, you can already enjoy a huge profit towards the end of the day. So here are all the things you need to take a look at tomorrow, and as usual, I'll come back tomorrow and we can discuss more and give you some inspiration for the next week. Earnings season is still on. We have a couple more weeks for big companies like Apple and other companies. So it's not there yet. But with that being said, today is July 23rd, Thursday, and I'll see you tomorrow.